Welcome. In today's video, we are going to be talking about how the Fed rate cuts can affect the Nigerian stock market positively. But before we proceed, one might ask, what is the Federal Reserve? The Federal Reserve Bank is an apex bank in the United States. You can look at it like the Central Bank of Nigeria. It regulates other banks in the United States and also set interest rates. Like the bank can either hike rate, cut rate, or pause rate whichever serve the economy best at that point in time. That's what they do. Their dual mandate is for maximum employment and stable prices. So that's their main focus. So in this video, we are going to be looking at how their rate cuts can affect the Nigerian stock market positively. So before we proceed with how it affects the Nigerian market, let's look at the possibility of rate cuts this month. The possibility of rate cut this month is around 91.7%. That's the probability of the Federal Reserve Bank cutting rate this month. And how long do we have until the next FOMC meeting? We have just 1 week, 4 days, approximately 22 hours, 4 minutes. This is what I'm highlighting on the screen so that you follow me. And what you're seeing here on the screen is the data from investing.com, Fed Rate Monitor. It monitors the probability of the Federal Reserve cutting rate or not. So, and this month, the probability is very, very high. So there's a very high percent chance that the Federal Reserve is going to cut interest rate this month. So, quick context, what the Fed is about to do is, the Federal Reserve, when it lowers interest rate, this makes borrowing cheaper in the US and reduces yield on US assets like treasury bonds. It makes borrowing very cheap, cutting interest rate. Let's say interest rate was around 4.0%, and if they cut by 25 basis points, we will now have 3.75%. The cost of borrowing is now cheaper, and it causes money to flow into the economy, boosting the economy, bringing more employment and the rest. But that's not where we're looking at in today's video. I'm just giving a quick context about it. Now, its global ripple effect is when the US yields drop, foreign investors start looking for higher returns elsewhere. Again, if the rates for treasury bonds now drop from 4.0% or 4.25% to, let's say, 2%, foreign investors will start looking for higher return elsewhere. That will now help like countries like emerging economies like Nigeria become attractive for higher interest rate and growth potential. As you already know, our interest rate is very, very high. If the Federal Reserve now cuts their own interest rate, that scenario alone will just attract foreign investors to our market. This could mean foreign portfolio investment flowing into the Nigeria exchange, that's the Nigeria Stock Exchange. So now let's look at the positive effects on the Nigeria stock market. One of the positive effects in the Nigeria stock market is it increased liquidity. More foreign inflows equals more money in the Nigeria equities, and you know what that means. Now, it also boosts banking and financial stocks. Banks benefit from increased transaction, lending, and foreign inflows. Stronger naira sentiment inflows can also help stabilize the currency, which investors love. Lastly, with extra foreign interest, local investors can also ride the waves by holding quality stocks. Dividend-paying blue-chip stocks like banks, consumer goods, oil and gas, these stocks, they benefit the most from this kind of scenario. So market dips become even better buying opportunities when global money is chasing returns. If you watch my last video, you notice even while the market was crashing, I was buying more, and I told you guys why I was buying more stocks. So the federal rate cuts will also help boost the Nigeria stock market positively. So, and I also want you to know something. Markets are not one directional. Global risk factors like oil price, geopolitics, inflation still matter. But overall, a Fed rate cut tiles sentiment in favor of emerging markets like Nigeria. So thank you guys for watching. Thanks for the support. Please like this video and subscribe to the YouTube channel. God bless you.